Hello all and welcome to another video where today I'll be taking you through a Principles of Bookkeeping Controls mock exam. So part 1 of this video I'll be taking you through questions 1 through to 4, and then in part 2 I'll be covering questions 5 through to 8. Just before we make a start, be sure to go follow me on Instagram where I post regular AAT updates to my story and also offer up some really useful accounting tips. Also, if you're really looking to boost your chances of passing this exam, be sure to go over to my website and check out my group revision sessions where I cover full mock exams over Zoom and give you the chance to ask questions live. I'll leave a link to both of these in the description of this video. Anyway, let's get on with the mock. I hope you do find this video useful, and remember, if you do, hit that like button and subscribe to the channel for many more AAT videos. Right then, so for the Principles of Bookkeeping Controls exam, you'll have 1.5 hours to complete 8 tasks, and in total the marks for this exam is 80. Now the marks aren't split equally across the tasks, however there's not a huge variation. I think one goes down to around 8, one goes up to 12, and some are at 10. However, obviously that doesn't really matter, just good to know beforehand. So what we'll do is we'll jump into task 1 and make a start. So task 1 is worth 10 marks and is about using control accounts. This task contains parts A through to C. Part A then, identify whether the following statements are true or false. And this one's for 2 marks, so 1 mark each. A debit balance on the VAT control account means that an error has been made in posting entries to the general ledger. So this one would definitely be false. So if we think about the VAT control account, we know that entries related to purchases or anything where we can claim the VAT back goes on the debit side of the VAT control account. Anything related to sales that we have to pay the VAT across to HMRC goes on the credit side. Now, it is absolutely possible that during some periods it may be that our purchases are higher than what our sales are, and at that point our debit entries on the VAT control would be higher than our credits, resulting in a debit balance on the VAT control. So it's absolutely feasible. There are also certain types of businesses which do constantly have a VAT reclaim due to the nature of goods that they produce, but we'll not get into that right now. But it is, as I say, completely feasible, and it wouldn't mean that there's an error in the system, and therefore that one would be false. The next one then, a receivables ledger control account, allows a business to identify the total amount owed from customers at a point in time. So that would absolutely be true. That's exactly what the receivables ledger control account does show us. So it represents all our individual customers within the general ledger. So it effectively puts all those balances into one account. And as I said, that represents all our customers, so effectively our total on our sales ledger, and represents that within our nominal ledger. So that would be true. Moving down then. So you have printed a report which shows the total amount owed to suppliers is £18,504 at the end of March. Your manager is surprised that so much is owed, as only £2,800 was owed at the end of February. He has asked you to prepare a payables ledger control account. You have identified the following information. So we can see here that we've got some details related to March. So we've got the purchases daybook totals with VAT net amounts. We've got purchase returns daybook, discounts received, and then the payments that the business has made to suppliers. So part B then states complete the table below to show the entries in the purchase ledger control account. Ensure numbers are included in either the debit or credit column, and this is worth 6 marks. Okay then, so let's just first think about what the payables ledger control account is. It's a liability account. It shows how much the business owes on credit to its suppliers. So now that we know that it's a liability, we know that it increases in value with a credit entry, i.e. the more we owe to suppliers, the further we will credit that account. Now anything that reduces the amount that is owed to those suppliers needs to go on the debit side to lower that liability down. So let's think about these entries and get these in basically to this little table. As it says, 6 marks, so it's 1 mark for each box here. So to start off with then, it says that £2,800 was owed at the end of February. So our balance brought down at the start of March would be £2,800. And because this is a liability, it would be a credit balance. So effectively what we're saying there is at the start of March, the business owed £2,800 to its credit suppliers. Next then, the purchaser's day book. So the purchaser's day book is going to show how much we effectively bought on credit throughout the month. So in this example, that is £19,200. So we can see the figure here. So that would further increase the amount that the business owed to its credit suppliers. So it would be a further credit in the account. And that would be for £19,200. Remember, we want to take the total amount because that is the actual amount owed to our suppliers. Remember, we don't pay our suppliers net and they somehow add on the VAT. We pay them gross, or we pay them the total amount. Okay, so moving down then, the purchase returns day book. So that will reduce the amount that the business owes to its credit suppliers. That's the amount that we've effectively returned in terms of goods, and that's what they would then owe us back, or reduce the amount that we owe to them. Okay, so that would again be the total amount of 1,440, and that would reduce the amount owed and therefore go on the debit side. Discounts received are discounts that we as a business have been given, and they do relate to settlement discounts or prompt payment discounts, as you probably know them, which is effectively where we've been given the opportunity to pay early and receive a discount. So that would obviously reduce the amount the business owed and therefore would go on the debit side of the payables ledger control account. So we'd put in there 456. Then we have the actual payments that have been made. Now, the payments to suppliers are obviously again going to reduce the amount that the business owes to its credit suppliers because it's literally us paying them. So we can put that 1,600 in. So then the last step is to calculate our balance carried down at the end of the month. So this works the same as any other account. What we would do is we would add up our debit entries, add up our credit entries, and then the difference between the two is going to be your balance. And remember, the balance carried down needs to go on the lower side of the account to balance it off so that both sides equal, and that will then be brought down on the opposing side at the start of the following month. So what we need to do, add up our credit entries, add up our debit entries, and then the difference between the two is going to be our balance. So if we do that, that gives us £18,504, which reconciles with what it states within the question, but it is always worth doing it just to double check. And that would go on the debit side because obviously, as you can see here, our credits, as will always be the case for the purchase ledger control, unless there's some very odd circumstances going off. However, that would go on the debit side, as I said, because the credit side is higher. So 18,504. Okay, so moving down from that, so the next part states you have printed a report which shows the balance brought down on the VAT control account at the 1st of May is a credit balance of £9,856. The following information is available for April. Okay, so we've actually been given the balance carried down at the end of the month here. So we can then see that we've got transactions throughout April. So we've got sales, purchases, discounts received, and bank payments to HMRC, and we've been given the VAT amounts. So then it states there have been no sale or purchase returns during April, and no discounts have been given to customers. Okay, so part C, calculate the balance on the VAT control account on the 1st of April. So we haven't actually been given our starting balance in this scenario. We've been given the ending balance for the month. So what we need to do is basically calculate this by drawing up a VAT control account. Definitely the easiest way of doing that. Don't get me wrong, in the exam you could, hopefully you should have some paper available to you. I would literally draw out the T account for this and put the entries in to then calculate the balance. So I'll show you what that would look like right now. So we'll do this on screen as well so that you can see exactly what's going on. Okay, so as I stated, we have no starting balance. However, the sales, we know the VAT on sales would go on the credit side of the VAT control. The VAT on purchases would go on the debit side of the VAT control. Discounts received would go on the credit side of the VAT control. And then the bank payment to HMRC would go on the debit side of the VAT control. Now I do have a separate video which breaks down everything in terms of the VAT control. I've also got another one for the payables ledger control account. I will link both of those in the description of this video so that if you want a more detailed overview of each of those, you can go watch those videos and I do explain it in full. Okay, so by doing that, what we can see is that obviously we do have a difference between our debit and credit column because we're still missing that opening balance. So all we will need to do is add up our debits, add up our credits, do the difference between the two, and we can see what our opening balance, our balance brought down at the start of April must have been. So the difference between the two sides, once we've done that, comes to 16,666. So let's enter that in. And as we can see, that would go on the lower side, which would have been the credit side. Okay, so that covers task 1. So hopefully nothing too overly complicated there. Let's now move on to task 2. So task 2 is worth 10 marks and is about reconciling control accounts. This task contains parts A through to C. Part A then, complete the following statements by selecting an option from each pick list below, and this is for 2 marks, so 1 mark for each. Reconciling the receivables ledger control account to the receivables ledger may identify errors in, and we've got some options. We've got the receivables ledger control account only, the receivables ledger only, and both the receivables ledger control account and the receivables ledger. Well, part of reconciling the receivables ledger control to the receivables ledger is basically identifying transactions on both of these accounts. So if there was an error or something missing, it would be identified in both the receivables ledger control and the receivables ledger. That is kind of the point of doing it in the first place, is to identify the differences between the two. So that would be both the receivables ledger control and the receivables ledger. The next one states an error in the receivables ledger, and then we have to select will or will not affect the trial balance. Well, the receivables ledger does not form part of your general ledger. It's a separate ledger, often referred to as your sales ledger. It's basically a separate ledger that records all our customers and the amounts that are owed from each of those customers on an individual level. So it will basically be a long list of all your customers and the amounts that each one owes to that business. So like I say, that does not form part of the general ledger. Now your trial balance is literally generated from your general ledger balances. So your receivables ledger balance would not be part of those general ledger balances and therefore will not affect the trial balance. You work in the accounts department of a furniture manufacturer. The following customer accounts make up the receivables ledger as at the 1st of April. And we can see we've got 4 customers on there. It then states there have been no sale or purchase returns during April and no discounts have been given to customers. Part B, what is the balance on the receivables ledger at the 1st of April? Okay, so we can see that we've got debit balances on Beautiful Homes Company, Big Discount Furniture, Bravo Home, but then we've got a credit balance on My Show Home Limited. So all we would need to do to get the balance on the receivables ledger is add up all the ones with positive or debit balances, so Beautiful Homes, Big Discount Furniture and Bravo Home, and deduct the balance on My Show Home Limited. So if we add those 3 together and deduct the balance from My Show Home, just to say you can get a credit balance on a customer account like this if that particular customer has overpaid. It's sometimes known as a payment on account and can be matched off against any future credit sales that you make to that customer. Okay, but if we add those three together and deduct the credit balance on My Show Home Limited, that gives us a balance, or an overall balance, on our receivables ledger of £105,470. Okay, so moving down, the balance on the receivables ledger control account on the 1st of April is a debit balance of £108,200. What is the difference between the balance on the receivables ledger and the receivables ledger control account? So all we need to do is do the difference between the value in part B that we've just worked out and the balance on the receivables ledger control account, which it gives you just here, so this 108,200. And if we do the difference between those two, that gives us an amount of 2,730. So now that we've entered that in, let's move on down to part C. So part C then, identify whether the following statements are true or false, and this is 6 marks, so 6 statements, 1 mark for each. A sale of £250 was posted to the wrong side of the individual customer account. This will result in a difference between the receivables ledger and the receivables ledger control account of £250. Okay, so that first one would be false. The reason being, it's all to do with being posted on the wrong side. So if it had just not been posted, then that would cause a difference of £250. The problem is, if it's been posted on the wrong side, so in this example, that would be that it had been posted on the credit side rather than the debit side of the individual customer account. Now, the problem with that is you've effectively doubled the difference. Okay, because not only are your debits now £250 too low, your credits are £250 too high. So the actual difference then between the individual customer account, or the receivables ledger, and the receivables ledger control would actually be £500 rather than just £250. So that first one would be false. The second one, a cash payment to a credit supplier of £400 was recorded in the payables ledger control account, but was missed from the individual supplier account. The payables ledger control account will show a balance of £400 less than the total in the payables ledger. So this one would be true. Okay, so think about how we record that. A payment to a credit supplier would be recorded on the debit side of the payables ledger control, i.e. reducing the balance, because we know that the balance on the payables ledger control shows a liability. It's the amount, the total amount that we owe our credit suppliers. So if we've paid £400 off that, that would lower the liability. Okay, so would the difference between the payables ledger and the payables ledger control account be 400? If it was missed just from one account, which it has been in this case, yes, it certainly would. So that would be true. The third one, a discount allowed of £50 was recorded as a sales return of £50 in the individual accounts. This will result in a difference between the receivables ledger and the receivables ledger control account of £100. So this one would be false. The reason being, they actually go on the same side. So although they've been recorded in the wrong account, so rather than it going as discounts allowed, it's gone as sales returns. Now, although it's gone, as I said, in the wrong account, it still goes on the same side. Now, because it doesn't say anything about it going on the wrong side, we can assume that it was recorded correctly, but to the wrong account. Therefore, actually, the balances would still match up. Now, there would need to be a correction done to move it from sales returns to discounts allowed. However, in terms of the actual balances, it wouldn't cause a difference. So that one would be false. The fourth one then, a purchase return of £80 has been recorded twice in the individual supplier account, but correctly in the control account. The balance on the payables ledger control account will be £80 higher than the payables ledger balance. So that would be absolutely true. So if we think about a purchase return, that would lower the balance owed to that particular supplier. So if it was recorded twice, we've effectively lowered the balance on our payables ledger twice. Okay, which will mean that the payables ledger control account will be £80 higher than the payables ledger balance. Now the correction needs to be done within the payables ledger, but the difference between the two would be £80. And obviously the ledger control account would indeed be £80 higher than the payables ledger balance. So that one would be true. The next one then, HMRC is included as a supplier when preparing the payables ledger control account. It is not, that one would be false. So HMRC is actually a separate liability account that we would record our taxes owed. So that could be VAT, you might have a separate one for payroll information, but it would be a separate account rather than being within the payables ledger control account. So that one would be false. So the last one then, a discount allowed of £175 was posted twice to the individual customer account, but only recorded once in the receivables ledger control account. This will result in the balance on the receivables ledger control account being £175 less than the receivables ledger balance. So this one would be false. So effectively it's the other way around. So there actually the receivables ledger would be £175 lower than the control account. See, if you've posted it twice into the individual customer account, bear in mind that a discount allowed would lower the balance. So if you've posted it in twice, that would lower the balance on your individual customer account twice, which would mean that your receivables ledger is £175 lower than what your receivables ledger control account is. So that one would therefore be false. Okay, so that one finishes task 2. Hopefully you found that one useful. Let's now move on to task 3. So task 3 then is worth 8 marks and is about payment methods and reconciling the cash book to the bank statement. This task contains parts A through to C. Part A then, identify whether the following payment methods impact the bank immediately, so same day, or at a later date. 2 marks, 1 mark for each. So these are hopefully something that you are aware of now. They should be described at decent length within your books. So CHAPS, Clearinghouse Automated Payment Systems, is usually used for large transactions. It's an electronic way of transferring high amounts of money and would be done immediately. And debit card would again be immediate. And when we say immediate, as it states there, it would be same day. So nice easy start there. Let's move on. There are many transactions that can result in a difference between the bank statement and the cash book. Part B, insert one option for each description by dragging the appropriate option into the space provided. 4 marks, 1 mark for each. So let's have a look at each description, and then basically what we need to do is drag these descriptions, or options should I say, against each of the descriptions here. So first one, the accounts clerk realised that a large amount of money from cash sales had accumulated and decided to take this to the bank. So that describes a counter credit. So a counter credit literally is the process of taking cash and depositing it into a bank account. The next one then, the gas and electricity bill for the month was automatically paid out of the bank account. So that would describe a direct debit. So remember, direct debits being variable amounts that are taken from the bank, so obviously being paid out of the bank. So then the next one, checks received from customers were paid into the bank just before the month end, but do not appear on the bank statement. So this describes an outstanding lodgement. So when it refers to income that's been recorded within our cash book, however has not yet appeared on our bank statement, that describes an outstanding lodgement. Okay, and then the last one, the business has paid suppliers by cheque totaling £2,340 during the month. These amounts do not appear on the bank statement. Now, when we've made a payment that appears on the cash book but not yet appearing on the bank statement, that describes an unpresented cheque. Okay, fantastic. So let's move down then to part C. So Part C states identify if the following adjustments will need to be made in the cash book, the bank reconciliation, both, or neither. 2 marks, so 1 mark for each. So a credit sale was recorded as a cash sale. The customer had not paid by the period end. So this first one would affect the cash book. See, if we think about this, if this should have been recorded as a credit sale and the customer hasn't paid, we've recorded that income coming into our cash book, but the customer hasn't paid. Okay, therefore we need to record it to show an asset within our accounts that would go to our trade receivables, but until that was paid, that wouldn't affect our cash book. So the adjustment would therefore be to remove that amount from our cash book. The next one, a customer who owed £800 only paid £720 as they took advantage of a prompt payment discount. Okay, so we know that a prompt payment discount occurs when a customer pays early, so that £720 would have been recorded within our cash book because that's the actual amount that's been paid, and that would also appear on our bank statement. So in terms of any adjustments, it would be neither. Okay, and that finishes task 3. We can now move on to task 4. So then on to task 4, which is worth 12 marks. This task is about reconciling a bank statement with the cash book. You've been provided with the cash book and the bank statement for September for Garden Makeover Co., a business selling garden furniture. You can see here we've got the cash book and then we've got the bank statement. So our first task then, it states update, well, first and last task by the looks of things, update the cash book and prepare a bank reconciliation as at the 30th of September. Okay, so we will start off by, it looks like, updating our cash book, and it wants the closing balance, so closing balance brought down. Okay, so if we look at our cash book, we have the balance carried down as £190. So if it wants the closing balance brought down, remember that that will flip over to the other side as at the start of the next month. So what we want is a closing balance brought down, which would be 100, was it 190? Yes, it was. So £190 debit. So effectively what we're saying is, as it starts off with, our debits at the end of the period are £190 higher than our credits. Okay. So let's now do our adjustments, so our updates to the cash book. So all we want to do is compare between the cash book and the bank statement and basically have a look what's on the bank statement that isn't in the cash book. Okay, and then we can update the cash book with those transactions. Okay, so let's do our quick reconciliation. So we've got 189 there and 1899, so that's correct. 1799, 1799. We've got 2299, 2299. Check 2051, which we don't have on there, but we do have a difference between the, just looking at these figures, we do have a difference between our opening balances on both. So what's the difference between those two? Let's just calculate that just in case that is our 2051. So we've got an opening balance 489 on our cash book. We've got an opening balance of 3438 on our bank statement, which has a difference of 2051. So that will relate to that check. So obviously it's just taken time for that check to come through on our bank statement. So we've got everything so far. Counter credit of 500, which we don't have. So that would be our first adjustment. So let's just grab that and just put in counter credit. So counter credit, how much was it for? £500, and it was a payment in. So it would be a debit within our cash book. So that's the first one. Let's keep going. So we've got one more to find. So we've got direct debit, 112, which we don't have on here. Okay, so our other entry would be our direct debit. So let's find that. Oops, scroll down. So direct debit phone company, and this was a payment out, so therefore it would be a credit within our cash book. Okay, we will check the others. However, that's everything on there that wasn't on there. So, but we'll just double check. So we've got 1399, which we have here. 1230 Fabric Centre, which we have here. And last one, 786, the Woodyard, which we have here. Okay, so we know that that's correct. So we now need to do our adjusted balance carried down. So we had a closing balance of 190, which was a debit. So that was the balance brought down. So we would add on 500 for that additional income from the counter credit and take off the £112 payment for our direct debit, which gives us now a difference of £578. And remember, this is asking for our balance carried down. So it goes on the lower side. So that would be £578 on the credit side. Obviously, at the start of the next month, the balance brought down would be now £578, but on the debit side. Okay, so that is step one. We now need to do our bank reconciliation. So our closing balance as per the bank statement was £279. So we can get that in. So 279. Okay. And remember, we want to add on any income yet to come onto our bank statement and deduct any expenditure, so any outgoings, again, that's not yet come onto our bank statement. So let's have a look now on our, or within our cash book, and see what is remaining that's not within our bank statement. So we checked off the 1899, we checked off the 2299, we checked off the 1799. Did we check off? We did. We checked off the 1399, 899. We didn't check that off. And yes, so we can see that Finley Green for 899 does not appear within our bank statement. Now that is on the debit side of our cash book and therefore income. So it would be a payment in that we're waiting on. So we need to add on, and it was, scroll down slightly. So it was for Finley Green. Let's just scroll up, double check the amount, 899. Okay, so obviously when that comes in, that would be add onto our bank statement balance because it's income. Okay, so then we need to look for, this is going to be a payment. So let's have a look at our payments now. So we had 600 from All Metals, which is our missing payment out. So we got the others, hadn't we? 1230, 1230, 786, 786. Okay, so it would be our All Metals Co. for 600. So we'd do less, and it'd be All Metals Co. 600. So our adjusted balance, so if we do 279 plus 899 minus 600, that gives us an adjusted balance of 578, which matches up perfectly with our adjusted balance that we've just worked out. Excellent. Okay, there is a bit of a technique to those. It's something that you do get a lot quicker at the more that you practice. You are just really looking for the differences between the two. And once you know to add on any income, take off any expenditure, that will give you the difference between your bank balance on your bank statement and your balance on your cash book. Okay, hopefully not too difficult. I know they are quite tricky up until a certain point. Once you can do them, it's something you will absolutely fly through. Okay, so that finishes off task 4, and that also finishes off part 1 of this video. So hopefully you found this part 1 useful. Remember, if you have, hit that like button and subscribe to the channel, and I will see you all in part 2.